Today on GrowthShares, let's analyze and see whether Prologis is a great long-term investment. Prologis is a real estate investment trust headquartered in San Francisco, California that invests in warehouses. Prologis is the largest industrial real estate company in the world. The company owned 4,703 buildings comprising 984 million square feet in 19 countries. Their business strategy is focused on warehouses that are located close to huge urban areas where land is scarce. It's been determined that $1.3 trillion worth of goods were transferred through its buildings annually, and that the company and its customers had a total annual economic impact of $200 billion. I've divided this analysis into three major factors: business, investment, and valuation. Each factor is then divided into individual metrics that are described in more detail. Along the way, I'll explain each metric to the overall analysis. The factors and metrics are measured differently to coincide with their significance to the analysis. They'll be graded on a scale from 0 to 10, with 0 being the worst and 10 being the best. When the analysis is complete, I'll give a final score. This analysis looks at the long-term perspective of the company. That's looking at it through the scope of years, not days or weeks. Let's first look at the business. Everything starts with what the company actually does. It's more than just numbers on a spreadsheet. That's why 45% of the analysis depends on the business. Something that makes $1 billion a year might sound nice, but how is it using its resources to make that billion? Fortunately, that can be quantified. There are 8 metrics that I use to measure the business, and we'll dive into them right now. Forward growth accounts for 7% of the analysis. It's basically the projected growth of the company over 1, 5, and 10 years. The higher the growth, the better. Prologis has a growth rate of negative 1.21%, and that means a score of 3. Business margins account for 5%. It's basically how efficiently the company is using its resources to run its business. The higher the margins, the better. Prologis has margins of 55.13%, and that means a score of 10. Operating margins account for 5% of the analysis. It's basically how much of a premium or discount the company is trading to its operating indicators. The lower the margins, the better. Prologis has operations of 50.8, and that means a score of 0. Rate of return accounts for 4%. It's basically how effective the company is using its invested capital when operating its business. The higher the returns, the better. Prologis has returns of 5.57%, and that means a score of 4. Debt utilization accounts for 4% of the analysis. It's basically how much debt the company is using to grow its business. The lower the utilization, the better. Prologis has a utilization of 1, and that means a score of 5. Dividends account for 4%. It's basically how much the company is paying out to shareholders as a way for them to reinvest in the company. The higher the yield, the better. Prologis pays a 1.49% dividend, and that means a score of 5. Sustainability accounts for 3% of the analysis. It's basically the company's ESG risk rating and how the company is addressing these issues. The lower the risk, the better. Prologis has an ESG risk rating of 8.5, and that means a score of 9. Market dominance accounts for 13%. It's basically how close the company is to a legal monopoly, what Warren Buffett calls a company's moat. The more dominant, the better. Prologis has primary market dominance, and that means a score of 10. When we add up all 8 business metrics together, we get a score of 5.84. Next, let's look at the investment. This factor looks at the company solely as an investment, as if rendering the company down to just ticker symbols on the screen. That's why 22% of the analysis depends on its investment score. How are others seeing the company from a trader and analyst point of view? What are the numbers telling us when it comes to this? There are 5 metrics that I use to measure the investments, and we'll dive into them right now. Stock performance accounts for 4% of the analysis. It's basically how well the company's stock has performed when compared to competitors and the overall market. The higher the difference, the better. Prologis has a performance ratio of 2.3, and that means a score of 7. Technical analysis accounts for 4%. It's basically how traders are looking at the company's stock as a way to enter or exit the investment. The higher the range, the better. Prologis has a range of 17.28%, and that means a score of 9. Short interest accounts for 4% of the analysis. It's basically what percentage of the company's stock is being shorted, indicating a downward pressure. The lower the interest, the better. Prologis has a short interest of 1.22%, and that means a score of 8. Wall Street analysis accounts for 6%. It's basically a consensus of what other analysts think of the company. The higher the buy recommendation, the better. Prologis has a buy recommendation of 75%, and that means a score of 7. Institutional ownership accounts for 4% of the analysis. It's basically what percentage of the company's stock is owned by large firms. The higher the percentage, the better. Prologis has an ownership of 96.9%, and that means a score of 10. When we add up all 5 investment metrics together, we get a score of 8.09. Finally, let's look at the valuation. Valuation is simple. It takes everything we've talked about and puts into a single number, the price at which we would be willing to buy the company's stock. That's why 33% of the analysis depends on its fair value price. At what price is the company worth pursuing? There's only one metric that I use to measure the valuation, and we'll dive into it right now. Fair value price accounts for 33%. It's basically the true value of the company's stock price when accounting for everything. The higher the fair value price is compared to its current price, the better. Prologis has a fair value price of $219.99 per share, which I consider to be undervalued, and that means a score of 8. For our valuation, we get a score of 8. Finally, we'll add the 3 factors together to get the final score. Based on my complete analysis of Prologis, I give a final score of 7.05, which makes it a good long-term investment. This is my analysis, and a good score doesn't necessarily mean I own or am buying the stock. Neither does a bad score mean I'm shorting or betting on the stock falling. My approach may not be right for you, so keep that in mind. My research takes about a week to complete, and since numbers, news, and figures change all the time, I usually do my research the week prior to publishing. Prices are current as of the last trading day of the previous week, but not always, and the valuations are up to date for a while. So you've made it this far, shoot me an email. I'd love to get in touch with you and talk more. If you want to see me analyze more companies, hit that like button, subscribe to my channel, and share this video with other investors. And as always, take care of your money.